So where do we even start? The BC NDP is coming in hot and heavy with regards to different types of rule changes on housing and trying to find ways to make affordable housing real, specifically in areas like Vancouver, where housing is unaffordable for most people making under $200,000 or $300,000 a year, or at least that's what the overall market seems to think. Now, the reality is many of these schemes and plots that are put in place are trying to address the primary issue of affordability, and the question mark that has to be asked and answered is, well, does it hit the nail on the head, and are we actually fixing issues or just out there trying to make headlines? I'll leave that up to you, but I'll give you my opinions as we work our way through it. Now, the NDP announced two different initiatives when it comes to helping people with affordable housing. The first one looks to be official, and the second one looks to be a campaign promise. So today we're going to start off by breaking down the two different initiatives and what we know, what we don't know, and what the potential outcome of these things could be. And let's be honest here, the government intervention in the housing market in the better part of the last couple of weeks has been monumental, from CMHC changing guidelines on purchase qualifications, amortization periods, switching guidelines, and now NDP announcing different rules around supplying affordable housing. Begs the question, why aren't we dealing with the primary issue around supply? I'll let you answer that and think about that for a minute. Let's get to the program and talk about what the offer is. So here's the numbers, here's what you need to know. First and foremost, the NDP announced the first one, which is in partnership with the First Nations land. There are three different First Nations. We've got the Squamish, Musqueam, and Tsleil-Watuth Nations, sorry for the pronunciation, alongside the BC government through the Attainable Housing Initiative. This is at the Heatherlands in Vancouver. Now, the big win is that buyers are supposed to be able to purchase these homes on the leased land at 40% below market value. Remember, leasehold land typically holds lower value anyways, so we'll see a lower value from that and a lower value from these initiatives. Now, the numbers themselves, they're going to try to produce 2,600 units throughout the Heatherlands, which is an 8.5 hectare site just between West 33rd and West 37th Avenue in Vancouver. Now, what types of homes are we looking at? Predominantly condos, as you can imagine. I would imagine they're going to be mostly studios, but we're suspecting studios, 1 bed, 2 bed, and a few 3 bed suites. You best believe it's going to be predominantly 1 bed or 1 bed and den with a mix of everything else in there. Now, some examples of pricing, to give you examples of where the market value of homes are today in Vancouver in those areas according to the government and where they're going to price these properties. Studio markets in Vancouver are listed around $620,000 according to the guidelines given, with these prices for these buyers who are qualified being at $372,000 for a studio. 1 bed's $850, and financing for someone else would be $510. 2 beds market price is $1.3. People can qualify for these at $780, and a 3 bed market price is $1.5, qualified at $900. Now, I'm not sure exactly where they got those price points. I assume they're just comparing it against other new builds in the area. And although those numbers are definitely lower than the marketplace, are they that significant, especially considering their lease land? And who's financing these builds? These are all questions that really need to be answered. So here's the thing. Buyers, according to this program, are going to need 5% deposit on 60% of the purchase price on the pre-built properties, making this a very affordable path for people. Pre-sales typically don't allow for 5%. You usually look for 10, 15, or 20%, especially when it comes to high-rise pre-sale properties. 15 seems to be the norm these days from what I've seen in most situations outside of concrete high-rises, but a 5% on 60% price points is obviously helpful for somebody getting in. So here's the financial model that they're looking at. So this is the breakdown of the program. Number one, apparently you own the home outright. I mean, it is on leased land, but you own the home itself outright. You are going to initially finance and pay just 60% of the market value, the numbers I just shared with you. The province is going to cover the remaining 40% of the market value, which is repaid when the home is sold or over time, or in 25 years. The initiative applies only to first-time purchasers, so resale transactions are going back to market value, which is interesting because that technically would mean that if somebody sold that property in 5 years, there's instantly going to be a lot of equity rebuilt, and that's, I assume, where the government is going to get repaid back that portion. So the key date that we need to know about is the 2025 date, because that is when construction is supposed to start, and that is when they're actually putting shovels in the ground to get this in place, with prospective buyers being able to register in spring of 2025, according to the program itself. So why is this impactful for Vancouver according to the government? Remember, a lot of these stats are based on what the government has provided us, and they're saying essentially with over $84,000 delivered or underway since 2017, this initiative fits into a broader strategy to address affordable housing in BC. That's laughable. Ultimately, Vancouver is not building enough homes, and it's questionable as to whether or not the strategy they've used to this date are even remotely close to being useful. So this 2,600 homes is going to be but a drop in the bucket. That is my perspective on it. According to this, the province is contributing over $672 million taxpayer dollars to this program, which expects to recoup one paying the financing. So the thought process is that this is not a grant, but this is a loan to individuals, and according to the notes here, it should not negatively impact taxpayer because it'll be paid back over the course of 25 years. My theory on that is very simple. Taxpayers say goodbye to your money. It is gone. Now, whether or not you believe this is well paid or well put into the marketplace, that's subjective, but you don't expect that money to come back. Now, some pros and cons on the solution. Let's talk about it. Pros, first and foremost, there's an affordability consideration here. There's no doubt this is below market value, and there is a benefit to a first-time brand new buyer getting to the marketplace. And we appreciate that. First-time buyers have a hard time getting into the Vancouver market. We need to keep people in Vancouver City, otherwise we don't have workers, we don't have places for people to stay. And just genuinely speaking, it's good from a marketability perspective to keep people in homes that they live in and they own. They're happier, more satisfied, and less likely to change jobs. Number two, there's obviously significance to the cultural side of things when it comes to developing the First Nations land. So we'll recognize that. And then the last one is that the idea here is that they're trying to create some more community, and people are going to live there for an extended period of time. Renters tend to move more frequently. People who own homes will stay there longer, which means at the end of the day, they're trying to build that community. That's at least what the government is saying. Remember, this is not coming from me in this case. Cons. The repayment structure over 25 years, it's questionable, A, as to whether or not people will repay this and what this looks like and how this is actually going to work. There was a BC down payment assistance program that came out from 2016 until 2017-18, if I can recall, and I actually helped a number of clients with that. When I look back at that program, it was considered a failed program in many ways, and I think there were rules and guidelines that could have been adjusted. But the thing is, that program actually got people into homes, whereas the question as to whether or not this will get into homes is more subjective, because you're only going to let people in Vancouver, and it's only going to be on leased land, and it's only going to be 2,600 families, and it has to be at a certain income amount, which was the case with the down payment assistance program. But that, genuinely speaking, helped people get the down payment when it got into homes if they fit the guidelines. The other cons are just really when it comes to the market conditions. How will they prevent flipping? What does that look like? There's some notes and comments about the fact that if someone is trying to assign it, they have to assign it back to the developer, and the developer will resell it at the same value to someone else. So they'll essentially get their money back, and they won't allow flipping. But there's still a lot of questions that are not answered. Now, according to the program, the eligibility requirements, which is really big, do you qualify for this program, is essentially number one, for a one bedroom or a studio, it's $131,000 of income annually and net assets below $150,000. For a two bedroom or larger, $191,910 annually and net assets below $250,000. Just think about that for a second. So you have to make $191,000 to qualify for this program or less and have assets below $250,000. Reasonably speaking, if someone's putting down a minimum down payment, they need to have that amount of money anyways to qualify for these properties. So is it a win? We'll see. And then the big question that I actually have is, where do the banks fit on this? Because if you don't know already, genuinely speaking, most First Nations have restrictions around which lenders will qualify these loans. So I'm sure some of the banks will jump on board, but it will be restrictive to a borrower, and that means it restricts options and could cost them more money in the long run. Now, we talked a little bit about speculation, but here are some of the resale restrictions that you need to know about. This is big. If a buyer sells within the first 3 years, they receive 0% of the appreciation back in the first year. So if you leave 1 year in, you get none of your appreciation back, just your down payment. Number two, you get 20% of the appreciation that you are allowed, which is a share of it. Remember, you own 60% of the property value, not 100%. And then in year three, if you sold, you get 40% of the appreciation to the property. Now the question mark again, does this make housing really affordable? Like, let's debate this for a second. A 60-40 split, 40% owned by the government, 60% owned by you. It's questionable. The reality is it's kind of like many of these other shared equity programs. We can debate the value of them, but none of them have actually worked for a variety of reasons, and one being the appreciation in our country is real, and the cost to get in is still significantly higher than most market positions. My feedback is that while they're looking to compensate people to get into the marketplace, this is a negative impact to people who basically have to pay taxes, and it also negatively impacts the home buyer from a perspective of having to select these pre-built homes and areas. Again, we like the initiative working together with the First Nations land and what's going on there. We don't know the financial benefits from our side, but I still look at this as going to be a major flop. At the end of the day, they're going to sell the units, it's going to happen, but is it going to have a significant intended effect? Probably not. You're restricting people's choice and freedom and focusing on a certain area from there. Before we go any further, we need to mention there is a second homebuyers program that was announced in conjunction with this, and we alluded to this in the beginning of the video. So the BC NDP, for their election promise, is vowing to help middle income owners, and they are stuck on this 40% rule, with 40% financing, a $1.29 billion initiative to support people to get into 25,000 homes over the next 5 years. Now, again, there's not enough announced by this particular program, just looking through the rules and the guidelines so far. The idea is it's going to help them buy with a smaller down payment. So the government is going to come up with a portion of the value of the home, so finance a portion of the value of the home. There's just too many questions that are not being answered, such as what would be the minimum income? What's the repayment look like? How are people getting paid back? How does this impact the taxpayer? And so much more. So it looks like the NDP is looking for a lot of creative ways, which will give them credit for getting people in the house. But why can't they fix the primary issue, which is the cost of development? Let's get more shovels in the ground. Let's build more properties. And then this will become less of an issue in the first place. Instead of restricting people and costing taxpayers so much money in initiatives that are restrictive, let's provide other opportunities to get people who are well qualified into the marketplace. And hey, I'm just gonna go out and say it, some variation of the down payment assistance program for first-time home buyers to me would make more sense than any of these other programs that we've got in place right here. And oh yes, maybe remove some of the red tape and help builders build so there's more options besides a one bedroom and a studio. Anyways, I'd love to hear your thoughts on the comments below. Is this a program that you're interested in? Would you want to take advantage of this? Do you think this is a move in the right direction? Do you think this is a mistake? Let me know in the comments below.